DDLT. So we have here 90, 95, 90, 95, 100, 105, 110, 115. And then they've given us the probabilities. Probabilities, we have 0.07, 0.07, we have 0.1, we have 0.25, 0.06, 0.02, 0.02. So probabilities have been given. Additional information. Additional information. So additional information, what are they telling us here? Additional information. Daily usage is 5 units. Daily usage is 5 units. Lead time is 21 days. 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 Lead time is 21 days, yes. Lead time is 21 days, very important. Cost per stock out is 300 per unit. Cost per stock out, this is number 3. Is 300 unit, 300 Kenya shillings per unit. That's cost per stock out. The carrying cost, number 4, annual carrying cost, annual carrying cost is shillings 40 per unit. Shillings 40 per unit. Great. So required, they want us to determine the optimal. Determine the optimal safety stock. Determine the optimal safety stock. Haya, ukiandika paka hapo iweka kidole namna hii. Determine the optimal safety stock. Nitakuelezea hizi hapa juu zinamaanishaje. Nataka tu kwanza you write up to where we have been able to write. I can see some thumbs up. 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 Great, 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 great. So I can go ahead and rub this one here. Can I rub this? Can I rub? I can see so many of you putting thumbs up. Can I rub this? Can I rub this? Yes, great. Now, when we see DDLT in this case here stands for who? DDLT. DDLT stands for demand during lead time. Write there that DDLT somewhere. DDLT stands for demand during lead time. Very important when you want to get safety stock. We will always tend to run out of stocks during this lead time, that lagging time. The lagging time, ladies and gentlemen, the lagging time when you've placed an order and your suppliers haven't delivered. Your suppliers haven't delivered, that lead time. Time between placement of an order and receiving of units. Receiving of units. So the required here is that they want us to do what here to determine. They want us to determine the optimal safety stock. Now, is it possible to have some good Samaritan who has written very good question here down to share the same on our WhatsApp groups? On our WhatsApp groups, and ensure that in both WhatsApp groups, somebody is sharing something there. Somebody sharing something there. Great, great, great. So should I get this kind of a question really? Where should I start from? Quite an easy question. I'll be able to get all the marks without even knowing what I'm doing, without knowing what I'm doing. There is something important that we forgot here, number of orders. Number of orders in a year, there are 6. We have 6 orders in a year. Please ongezea hiyo kwamba we have got 6 orders in a year. Number 4 now. The 4th additional information is supposed to be that number of orders are 6 in a year. Number of orders are 6 in a year. So if I get this kind of a question, ladies and gentlemen, this, of course, is an examiner who is wishing me success, and this is what I should do. The very first thing that I will do in this kind of a question is this. I'll come and get what we call the current ROP. That is the first step. You give us what we call the current ROP. Very important. The current ROP. ROP stands for reorder point. ROP stands for reorder point. Please write that in full. ROP stands for reorder point. And this current reorder point is the consumption during lead time. This is the consumption during lead time. This is the consumption during what? During lead time. The consumption during lead time. Fortunately, these guys have given us the lead time number of days. They've told us that we have got how many lead time days? 5 of them. We've got, in this case here, 21 days, yes. 21 days. And each day we normally consume 5 units. So in this case here, the total consumption during lead time will be these 21 days times the number of units you're consuming per day. So 21 times 5, this gives me what current ROP. Can somebody in this case here give us a figure? 21 times 5, the current ROP. So ukisikia current reorder point, remember that this is that quantity that we shall consume during this dangerous period, during the dangerous period, which is the lead time. So 21 times 5, somebody is giving me a figure of 105. 105. Now, the moment I get the current ROP, I'll always come and fit it in the DDLT. This is demand during lead time. So where is 105? 105 is fortunately there. There is where we have 105. 105 is there. Now, once you've told me that 105 is there, then everything else is at home now. Everything else in this case here becomes very easy. So then how do we do our schedule? Look at what I'll do in our analysis schedule. So in our analysis schedule, this is what I shall do. In our analysis schedule, this is what I shall do. I'll come and have what we call ROP. Don't squeeze yours so much. I'll have what we call ROP, right? ROP. ROP is the reorder point, the reorder point. And we must begin from the current reorder point, which you guys have been able to put a star here. So we must begin from the current reorder point when you're mentioning this. So it shall be 105. Remember, it's forward ever, like salvation, It's forward ever, backward never. So we start with this 105 and then we move forward. So 105, then we have got 110, and then we have got 115, like that. 105, 110, 115, forward ever. From the current one, you move ahead. From the current one, you move ahead. But now, we don't write them like this. We normally leave lots and lots of spaces, lots and lots of spaces, lots and lots of spaces, like 5 lines in between, 5 lines in between. For me, I don't have lines. So 105, so we have 110 there, and then we have got 115. This is sufficient for me. 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 Now, ladies and gentlemen, once I've done this roping, the current ROP, I've started with the current ROP, and then I move forward and I indicated all the possible ROPs. What I'll do, I'll come and have a big column here where I write the shortage. Remember, we shall run out of stocks when demand exceeds what we have kept. When demand is more than what we have supplied, when demand is more than what we have supplied, we run out of stocks. We shall be short of stocks. We shall disappoint some of our customers, which will be unfortunate. Now listen, how do I get this shortage? I'll come to the demand. You know, rope is the same as supply. This is what you have supplied. This is what you have supplied. So then, ladies and gentlemen, I'll come and match this supply with my demand and ask myself, what are those situations when I will risk running out of what here? Stocks. Listen here, ladies and gentlemen, here, the demands which are bigger than 105, there are only two demands which are bigger, two demand levels that are bigger than 105. In this entire series, there are only two demand amounts which are bigger than 105. Which demand amounts are these? We have somebody 110 and 115. So we're asking ourselves, what if we just stock 105 and then we have, in this case here, 110 people coming? How many people shall we be able to turn away? How many people shall we turn away? If we have stocked 105, and then the first demand to exceed this 105 is 110. So if 110 consumers come, we shall turn away how many people? So we write that is a shortage. This is a possible shortage. This is a possible shortage. The other shortage possibility is that we have 115 coming. So if you've got 115 coming and we had prepared ourselves with just 105, then we shall disappoint how many? We shall disappoint how many? We shall disappoint how many? We shall disappoint 10. We shall disappoint 10 like that. Great. Now listen, that is all for 105. What in this case here, if we were to put down 110, what if we supply now 110? Can somebody give me the possible shortages? The possible shortages. The possible shortages. The possible shortages. Somebody's telling me 5. Somebody's telling me 5. Somebody's telling me 5. Actually, let me tell you something, ladies and gentlemen. This is not something you're supposed to think at all. If you get yourself thinking about this thing, then you have a problem. Never, ever think at all. So like now here, that I've written this. If in this case here, I've written this 105 is my current drop. How do I get to pick the shortages very fast? I just use this series, right? So I'll not even make reference here. Why? I'll not make reference there. So what I'll do, the most important thing is for me to get the current drop. After I get the current drop, then every other thing falls in place. Listen, so if I stock 105, there is this possibility that the demand will be 110. So if the demand is 110, then I will disappoint 5 people. If the demand is 115, then out of this, I'll disappoint how many people? I'll disappoint 10 people because I'm taking 105 as my bench. As my bench, right? I'm subtracting. So please come to this one. Is there somebody who can give me the possible shortage here? Is there somebody who can give me the possible shortage? Is there any possible shortage? Yes, if I just look at this, only one possibility, 5. So if I stock this, is there any possible shortage? If I were to stock this, is there any possible shortage? 0, isn't it? No possible shortage like that. Now, what about, in this case here, probabilities? What about probabilities? Probability of shortages. Is there somebody in this case here who can give us the probability of shortages here? Is there anybody who can give us the probability of shortages? Probability of shortages, again, you should never, ever reason at all. Of course, in this case, in terms of probability here there is no probability of shortage. When I come here, what I'll do, I'll start counting my probabilities from down. The first probability is this. So I always take the last, I start with this, and it's only 1. So here we have times 0.02. Now, when I come here, I'll always start with the last one and I move up. I start with the last probability and then I move up. So like now for this, for 10, I will take the first one down here, which is 0.02. And then of course, here I've got 2 scenarios, so I keep moving up. So you have times 0.0 what here, 6 like that, 0.06. 0.06. So long as I know that whenever there is a possibility of disappointing, I'll always start by counting my probabilities from down. So I start counting from down, I move up. I keep on moving up like that. Now, ladies and gentlemen, listen. These are now what we call the expected disappointments in terms of units. Do we know how much it will cost us if we disappoint one customer? What is the shortage cost per unit? Somebody who wrote this question. What is the disappointment cost per unit? What is the shortage cost per unit? The shortage cost per unit from Frida Kendi is 300. The shortage cost per unit from Frida Kendi is 300. 300. 300. So in this case here, we have here times 300, times 300 all through, times 300, times 300. Of course, yeah, there is no reason for you to put anything like 300, because 0 multiplied by anything will be 0. Now, listen, and this is now where the rubber meets the road. This is the touchdown point for the plane, right? So the ground, of course, must be a little bit shaky. This shortage that you have here is shortage per cycle. And I would want this to be annualized. I would want this to be annualized. So how do I annualize this? When you get, in this case here, shortage per cycle, to annualize, you multiply this by number of orders in a year. Number of orders in a year. In this question, they gave us number of orders in a year. Is there somebody who is able to remember what the number of orders in a year are? Yeah, 6 throughout, isn't it? So times 6, times 6, times 6 like that. Kuisha maneno. Sasa kujeni hapa, munipatie hii total. Total for both. Total. So the total here. Give me the total here. Give me the total here. So the total that I would want you guys to give me, the total shortage, I would want you to take 5 times 0.06 times 300 times 6 plus the second block. The second block. Plus 10 times 0.02 times 300 times 6 times 6. So that you can combine both. So that you can combine both. Could you kindly, in this case, give me the total shortage, total expected shortage cost, total expected shortage cost from Atieno, she's getting 900. The total expected shortage cost is 900. The total expected shortage cost is 900. This one here, we are quite fortunate. We are quite fortunate. We only have one block. So this one block is coming to 100 and what here? 180. Like that. 180, 180, 180. Of course, this is 0 like that, 0 like that. And that is the end of this. That is the end of this. Now, ladies and gentlemen, after I reach here, now I will be able to remember the concept of safety stocks. I'll be able to remember the concept of safety stocks. I shall remember the concept of safety stocks. And safety stocks, what we do, you create some space here at the very beginning, because really safety stock is the major concept here. You create in this case here, a column here for safety stock. You can decide to expand your book, safety stock, safety stock, safety stock, safety stock. Who can give me the safety stock of the first rope? What is the safety stock in the current rope? What is the safety stock in the current rope? Current rope, ladies and gentlemen, has always a 0 safety stock. You always start with 0 here, 0 there. And then how to get the safety stock for this, you'll take 110 minus 105. 110 minus 105 gives me a safety stock of what there? 5. Gives me a safety stock of 5. What if I supply 150 knowing that this is what will be consumed? The excess goes to safety. The excess goes to buffer. So can give me the buffer here, somebody. 115 minus 105. 115 minus 105 gives me what figure, somebody? Gives me 10. Gives me 10. So once you have this safety stock, of course, you know safety stock is not a free thing. Safety stock, I'll have to incur cost, storage cost, carrying cost, holding cost. So come and give us here holding cost of safety stock. Very easy concept. Holding cost of safety stock. Safety stock, very easy. I'll simply take the safety stock units times the holding cost per unit per annum. Have they given me the holding cost per unit per annum? Have they given me the holding? Holding cost is the same as carrying cost. Holding cost is the same as carrying cost. Holding cost is the same as carrying cost. Are you able to see the carrying cost in this question? The carrying cost is 40, right? The carrying cost is 40. So here, the safety stock is 5. So 5 times 40, then we have 10 there. So we have 10 times 40. So this, of course, is 0. This is 0. This one is quite an easy one. 5 times 40 gives me what figure? 5 times 40 gives me what figure? Is it not 200? It must be 200, right? Must be 200. 10 times 40 will give me 400. So then could you kindly give me the last column, which is the total cost? Could you kindly give me the last column, which is the total cost? Total cost, now you are taking, in this case here, the shortage cost plus the holding cost. So 900 plus 0 gives me 900. We have 180 plus 200, giving me 380. This is 0 plus 400, which will give me 400, like that. And now you make a decision on the basis of the lowest cost. You make a decision on the basis of the lowest cost. So between the three, which one is the very least cost? Which one is the very least cost? Between the three, which one is the very least cost? Can somebody talk to me? The very lowest cost is 380. This is the lowest cost. This one here is the lowest cost. This is the lowest cost. So the lowest cost, this is it. It is the optimal cost. It is the best cost. It is the optimal cost. It is the best cost. It is the optimal cost. And therefore, the optimal reorder point, the optimal reorder point is the one that corresponds with this. So the optimal reorder point is 110. 110 is what they should supply. And then we have the optimal safety stock. We have the optimal safety stock, the optimal safety stock, the optimal safety stock, which corresponds with this, is 5 units. It's 5 units like that. It's 5 units. It's 5 units. The optimal safety stock is 5 units like that. So I've seen so many of you asking questions simply because they came in a little bit late, and some of you, of course, had issues with internet. I can see there. To help us all, I think we should now get a fresh question and we start doing the whole of it from scratch. What do you think? What do you think? Yeah, we just get a new question, a past paper question, and then we do it from the beginning now. We do it from the beginning, yes. That will be fair to everybody instead of Mwalimu starting from scratch. And this question that I would want us to do tonight from our past papers is November 2017. November 2017, question number 5, boy. 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 Are we there? Are we there? Are we there? And it's my hope that all of us will be having our minds fixated here. Nobody will be thinking about the debate. Is there anybody who wants to watch the debate? The only debate we have is this one here. The only debate we have is this one here. The only debate we have is this one here. Yeah. No debate. What do you mean? There is a debate. There's a debate. I've been watching one from this Wakili Maure. Yeah, and he's doing very well. That is a great gentleman, right? So we don't have any other debate. Are you sure we don't have any other debate? No debate at all? Great. So November 2017, question number 5B. So November 2017, question number 5B. November 2017. The debate is safety stock. November 2017, question number 5, boy, like that. The Trans Limited supplies a product branded Big G. No, it's BBG. Although the annual demand for BBG is high, it varies considerably. The demand during lead time and the associated probabilities are as follows. They've told us Trans Limited places 5 orders annually. Ordering cost per order amounts to 6,000. The carrying cost amounts to 1,000 per unit. The estimated cost stock out cost is 5,000. The reorder point is 850 units. The lead time is 12 working days. So they want us to advise the management of Trans Limited on the amount of safety stock to be maintained. If I go and get an examiner who sets this kind of a question in an exam, I'll start rejoicing immediately because this is a good examiner who is wishing you success. What will I do? I'll copy first of all this column of DDLT, the demand during lead time. I'll just copy it. I'll just copy it very fast. Even in an exam, by the way, you don't need it to copy, but myself, because I would want to demonstrate something on the board, it'll be important for me to copy this. So it is DDLT, demand during lead time. So it is 600, we have 650, we have 700, we have 750, 800, 850, 900, 950, we have 1,000, we have 1050, we have 1,100, like that. Now from there, I'll ask myself whether we have a current ROP. This is a subject which favors Kalenjins a lot. Kiprotich. Do we have in this case here current ROP, reorder point? Current reorder point. Do we have it? Do we have it? Eric Odinga tells me 850. Thank you so much. What if it was not given directly? What if it wasn't given directly? Because in your exam, it can't be given. What if it wasn't given directly? What would have you done? What if it wasn't given directly? Yeah, you calculate it, isn't it? And really current ROP, I told you current reorder point is consumption during lead time. You take the consumption per day times the lead time days. You take the consumption per day times lead time days. Consumption per day times, but this one is given. Now, do we have 850? Do we have 850 in this series? Fortunately, it is here. It is there. Now, from there now, once I've been able to attack that, I'll come and now do a very special table, call it an analysis schedule. Analysis schedule. Analysis schedule. Sasa umeanza kuzoea, lazima uanze na column ya safety stock. Column ya safety stock. Tuko na column ya reorder point ROP, like that. Lakini sasa always unaanza na ROP. Na katika ROP yangu nitaanza na nini jameni? Nitaanza na namba gani jameni? Katika this column of ROP. So this one, if I were you, I would have called this the C ROP, the current ROP, very important, current ROP. And the current ROP marks my beginning point. It is 850. And you can see in this case here, these numbers are many. You know, we have 1, 2, 3, 4, 5. So I have to skip how many lines here? 1, 2. You guys are counting. You guys are counting. Skip enough number of lines, and then you pick the second one. The second one in this case is 900. Skip enough lines for me. I'll be able to squeeze mine. Next one is 950. 950. As I go on, I don't need them to be very many. So we have 1,000. I'll be able to know what to do. We have 1050, 1050, no worries. 1050, 1050. And then, of course, we have 1,100 lastly. 1,100 lastly. I'll know what to do when I reach here. I know what to do when I reach there. I'll know what to do when I reach there. Aya. Sasa kutoka hapa, what do I do? Kutoka hapa, what do I do? I'll come and create a column here for shortages. For shortages. So I would want to give you 1 minute. I know there are students who have just joined us, but I want to give you 1 minute to see whether there is any student who will be able to come up with shortages for this first sale. Let me see whether there is any student who will be able to come up with shortages for the first sale. Shortages for the first sale. Let me see whether there are students who will be able to come up with shortages for the first sale. Shortages for the first sale. Shortages for the first sale. Is there anybody who can come up with shortages of the first sale? Shortages of the first sale. I'll have to squeeze this thing a little bit. No, I know what to do. 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 I know exactly what to do. Great. Great. So in this case here, we have our safety stock. So we have our safety stock here. We have our ROP values. Then we have, in this case here, our shortages. Our shortages. Great. So, ladies and gentlemen, this is what we have. The first row is 850. I'll leave some enough space there. I'll leave some enough space there. And then I come and pick the second one here, which is 900. I leave some space there, leave some space again there. Then I pick the third one, which is 950. Leave again some space, right? So we have 1,000, 1,000. We have some space there. We have 1050. We have some space there. And then now we have 1,100. I hope now they're able to see all my numbers. Yes. To get shortages is very easy. To get shortages is the concept of forward ever. I don't even have to go back there. So to get shortages, ladies and gentlemen, I'll ask myself, of course, I'll benchmark this with the subsequent ones. So if they come, if the demand is 900, here I'll disappoint 50. If the demand is 950, vis-a-vis this, I'll disappoint 100. If the demand is 1,000, I'll disappoint 150. If the demand is 1050, I'll disappoint 200. If the demand is 1,100, I'll disappoint 250. So is there somebody who was able to get those shortages like that for the first sale? They're not very clear. And I hope you guys have those. Yeah. Could you kindly go to the second one, second cell, and give me all the shortages? Go to the second cell, and then you give me all the shortages. For the second cell, let's see. Let's see. Second cell, give me all the shortages. When demand is more, and you have supplied just 900, already you can see Atieno has figures there. Thank you so much, because it's about this. If demand is more, normally shortages, you go for higher demands. If demand is 950, then, and I had stocked this, I disappoint 50. If demand is 1,000, I disappoint 100, because it will be 1,000 minus 900. If demand is 1050, I will be able to disappoint 150. If demand is 1,100, then I'll be able to disappoint 200, like that. How about the third one? Gordon, you had said, you had asked me to repeat this. How about the third one? The third one. So you go to the third one, when demand, what are the possibilities of demand outstripping this 950? You start with this. So 1,000 minus 950 is 50, right? 1050 minus this is 100. Then we have 11 minus this is 150, like that. All right, then you come here. So here, vis-a-vis this is 50, this vis-a-vis this is 100. Then you come here, this will be 50, and of course this is what here, 0, like that. The next thing which normally gives students problems is the attachment of probabilities to this figure. Can somebody in this case here help us to attach probabilities here? I can see those probabilities. The probabilities have been given down there. I can see 0.02. I can see 0.02. I can see the probabilities down here, 0.02, 0.02, 0.03. We have 0.03 again. We have 0.04. Then we have 0.05. Then we have 0.05 again. Yeah, you don't have to write all of them. And remember, when you are attaching these probabilities, you don't think. If you start thinking, you'll always get it wrong. When you're attaching these probabilities, if it's these, you start from down, moving up without reasoning at all. Don't reason. First of all, right there, times. We have here times. And then we start with, now it's backward ever. You start with the down one here, the lowest here. So we have here 0.02. The next one is 0.03. The next one is 0.03. The next one is 0.04. And then we have 0.05, like that. The same case with the second cell. You start with the lowest always. Lowest probability here. You move up. You start with the lowest. So the lowest here is 0.02, we have 0.03, 0.03, we have 0.04. And then we got the third cell. The third cell, again, we start with the lowest probability without thinking. This is the only topic in AMA which does not want you to think at all. It doesn't like even thinkers, right? So we have here 0.02, we have here 0.03, we have here 0.03. And then you come to this, we start with 0.02, 0.03. And then this one here will be 0.02. Of course, there is nothing. Don't put any probabilities there. 0 multiplied by anything is 0. Now, if you're following, I'll come and say times here. This thing has now given me the shortages, expected shortages, expected stock out units, which will be the next parameter to bring on board. Which will be the next parameter to bring on board. Which will be the next parameter to bring on board. Next number, which is the next number that I should bring on board. Somebody is trying to follow. Stock out cost per unit, isn't it? Stock out cost per unit. So as this examiner given as the stock out cost per unit, as this examiner given as the stock out cost per unit, 5,000, isn't it? 5,000, yes. So times 5,000, 5,000, or through okay, so times. We have something that almost everyone forgets. We have something that almost everyone forgets. Is there somebody who is able to remind us what that thing is? You guys will not forget this, but very many people will always forget this. The annual orders, you're right. So as this examiner given as the annual orders, you have 5 throughout. So times 5. So times 5, 5, 5, 5, 5, 5, 5. 5, 5, 5, 5, 5, 5 like that. So now after that, of course, it will be for us to come and ascertain, the total stock out cost. Like the first one is a crazy one. If you feel it is too much for you, of course, you can write it down, you can write each one of them. But if I'm the one doing this, really, this is not a big deal. The first block, it's 50 times 0.05 times 5,000 times 5. I say plus the second block, plus the third block, plus the fourth block, plus the fifth block, and then I get the total stock out cost. I get the total stock out cost from Lenovo brand. He is telling me that this is supposed to be 550,000, 550,000, 550,000, like Lenovo man. 550,000, like that. I would want to get a confirmation from other students. Are you able to get this figure really, 550,000, right? Thank you very much. How about the blocks in the second cell? Please consolidate them. Consolidate them up. Give me the total stock out cost for this cell. Give me the total stock out cost for this cell. Total. Probabilities, we are not apportioning at all. They are given. Probabilities are given from down here. You pick them always from down. You start from the last activity. So take 0.02, 0. You don't apportion them at all. So like when you come here, the last one, you pick the last probability here, you go up, you keep on going up until you exhaust the top. Like now for this one here, we are 250 the lowest. So we took the 0.02 for this, went up 0.03, 0.03, 0.04, 0.05, we are able to exhaust. So we move up, we don't apportion again. So for 900, is there somebody who is able to give us the total cost for 900? Is there anybody who is able to give us the total cost for 900 really? Total cost for 900. Total cost for 337,500. 337,500. 337,500. 337,500. 337,500. And then now we have the third cell. The third cell, is there somebody who can give us the third cell is 187,500. 187,500. 187,500. And then we come to this one, ladies and gentlemen. Is there somebody who can give us a figure here? This one here. Total for 1,000. Total for 1,000. 87,500. 87,500. All right. And then for 1050, what do we have there, somebody? It is 25,500. Can somebody else confirm that? Someone else to confirm that. Someone else to confirm that. 25K. Jimmy tells me it is 25,000. Thank you so much. Then, of course, the total here is 0. So like that. Now, the next thing will be the holding cost. Holding cost of safety stock. Safety stock. But first of all, is there anybody who can give me these safety stocks downwards? Can somebody try giving me the safety stocks downwards? Can somebody try giving me the safety stocks downwards? Can somebody try giving me the safety stocks downwards? Safety stocks downwards. So safety stocks downwards, what do we have, somebody? Yes, we start with the first current drop as always as 0 safety stock. And then you keep on now subtracting. From here to here, we have 50, that difference, right? Right. So keep on moving like that. Benchmark being this. So 850 to here is 100. 850 to here is 150. 850 to here is 200. And then we have 850 to 1100, which is supposed to be 250 like that. 250 like that. And then have they given me the holding cost per unit really? Have they given me the holding cost per unit? Have they given me the holding cost per unit of the safety stock? Because safety stock, we must maintain them. 1,000 per unit, eh? Great. I hope it's 1,000 per unit per annum. 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 So then this one here will be 0 times 1,000. This one here will be 50 times 1,000. This one here will be 100 times 1,000. This will be 150 times 1,000. This will be 200 times 1,000. This will be 250 times 1,000, like that. So this is 0. The first one is 0. The second one will be what here? Somebody, the second one will be 50,000. The second one is 50,000 here. How about the third one? 100,000. 100,000, 150,000, 200,000, then we have 250,000 like that. So could you kindly then move ahead and give me the total costs? Total cost is the shortage cost plus holding cost. Shortage cost plus holding cost. Total cost is shortage cost plus holding cost. Total cost is shortage cost plus holding cost. Total cost is shortage cost plus holding cost. So 550,000 plus 0, that gives me what figure, somebody? Or the holding cost has a problem, right? Does it have a problem? The holding cost, does it have a problem? I'm being told the holding cost has an issue. The holding cost has an issue. What is the problem with it? What is the problem with the holding cost? Is there somebody who is able to tell us the problem with the holding cost? What is the problem with the holding cost? Now, I would have taken it to be a problem. I would have taken it to be a problem if, for example, they told us it's holding cost per unit per month. If it was holding cost per unit per month, then I would have picked the figure multiplied by 12. But you see here, they are silent. So the better thing to do is to assume that that is an annual holding cost. Thanks for raising that question. Yeah, ordering cost we ignore in this question. Ordering cost we ignore in this question. Ordering cost we ignore in this question. So give me the total cost. So the total cost you add, here we have 550,000. This and this, somebody give me these figures very fast. That will be 387,500. 387,500. All right. And then you go to the next one. This is 287,500. 287,500. All right. Now these others have to depend on you. The others have to depend on you. The others have to depend on you. The others I have to depend on you. The others I have to depend purely on you. I have to depend on you, but also they're not very hard. Like now this would be 237, 237,500, 237,500, 237,500, 237,500. When you come to the next one, it will be 200 and 250, giving me 450,000, 450,000, and then we have here 250,000 if I'm not wrong. 250,000 if I'm not wrong. 225. Is there 225? Is there 225 there? Yeah, you're right. We have 200,000. How did I get 450 really? That's 25,000 plus 200,000. It should be 225,000. You guys are right. It should be 225,000. 225,000. You guys are right and right. 225,000. Thank you very much. 225,000, like that. So what I don't know is whether now every other cost of mine is correct. Total costs, are they correct? And if they are correct, is there anybody who can pick now the lowest? The lowest. Is there somebody who can pick the lowest amongst all those costs? Which one is the lowest? Which one is the lowest? They don't want to talk to me. Which one is the lowest? 225,000, 225,000, 225,000 is the lowest cost. This is the lowest cost. And if it is the lowest cost, then we should be able to advise the client. So you should be able to tell the client what are we going to advise the client regards. Yeah, safety stock should be the safety stock, call it the optimal, the one that corresponds to this lowest cost. So the safety stock here is 200. So right there that the safety optimal safety stock is 200. Optimal safety stock is 200. Optimal safety stock is 200. And the optimal reorder point is how many units? The optimal reorder point is how many units? The optimal reorder point is how many units? The one that corresponds still to this, it is this 1050. It is 1050. It is 1050. Now, it's quite unfortunate that most accountants don't know how to dance. If I were you and I've understood this thing, I would have woken up from my seat and danced a little bit, you know. You dance a little, you celebrate milestones. You celebrate little milestones here and there. You need to know how to celebrate little milestones. And of course, if you haven't understood at all, you should be able to do what here somebody put a big emoji there crying. A big emoji there crying. A big emoji there crying. I'm jumping now. Jumping is very healthy because this is a lengthy class, 3-hour class. 3-hour class. No. You don't in this case you wait after. You have to start today. You have to envision. You've passed already. You envision like that. You have to start today. You have to start dancing today. It's called faith. You must be people of faith. You must be people of faith. All right. So then what is the probability of a stock out? You have just advised us to keep what here? Somebody, you have advised us to keep 1050 units. You have advised us to stock 1050 units. So the probability that I would run out of stock is only one occurrence. So the probability of running out of stock with this 1050 is this probability. So probability of out of stock is 0.02. Probability of out of stock is 0.02. Because you've told us, stock this. And if you stock 1050, then there is only one possibility of demand exceeding this. What if the optimal ROP was 1,000? If the optimal ROP was 1,000, what would have been the probability of stock out? Can somebody guess? 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 What if Yes. Oh, yes. If, for example, the reorder point is 1,000, then the probability of stock out will be the probability of the higher quantities. I would have taken 0.03 plus 0.02. 0.03 plus 0.02. Probability of a higher quantities. I mean, that is a mark. How many students will be able to get that mark correct? Very few. You ignore it. You ignore it. The big thing is this. If you're able to do this analysis, then you're a genius. You're a genius. Is there somebody in this case here who has understood that? Is there somebody who has understood this? Is there somebody who has understood this table? This table? Yeah. Yeah. Leave alone these 1, 2 marks of probability. The last one, not many will be able to get it. Great, 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 great. Ordering cost. You know, when we are talking of safety stock, ordering cost is a non-issue. Ordering cost is a non-issue. Ordering cost comes when we are looking at like simulation. I think I've done justice to this. The student who is saying I repeat this, I would rather we talk over video now because of the time. You came in late. Let's talk over video. Let's talk over video. Let's talk over video after this class. I think that will be fair to everybody. I think that will be fair to everybody. Of course, Erica, you can see there are probabilities. Any model which has got probabilities is a stochastic model. Deterministic models are those models here without probabilities. Great, great. How are marks allocated? Hamisi, the most important thing, understand the table. What are your marks? You ukifanya hivi, utapata the 10 out of 7. 10 out of 7. 10 out of 7. The most important thing here is the concept. Great. Now, ladies and gentlemen, is there anybody in this case here who doesn't know how to do simulation of inventory? Is there anybody who doesn't know how to do simulation of inventory? Is there somebody who would want Mwalimu to do simulation of inventory? Simulation of inventory. 2 students. 2 students. If there are very few, we should say we are not doing. Oh, now there are 4. Wow. Now there are 4. Okay. There are 4. There are 4. Now there are 4. Just a reminder, no problem. Let me see whether I'll be able to get a very good question. Yes. Let's do November 2018. November 2018. November 2018. November 2018, question number 3. November 2018, question number 3. I'll just brush through it very fast. November 2018, question number 3. Yes, it missed last semester. November 2018, question number 3. November 2018, question number 3. Vitabu Limited, are we there? November 2018, question number 3. 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 November 2018,